Hello everybody, welcome to the live stream. Hopefully everything is working at your end. If you're new to this, we do this normally every Friday at 2:30 UK time. And the format is we take a look at the major markets. So we take a look at stock indices, FX, gold, oil, silver, Bitcoin and Ethereum. I think that's it, isn't it? And then what we do is go through any markets that you want looking at. So we do that by you put the markets you want looking at in the questions in the chat. And once we've been through the list of markets at the beginning, that's when we'll go through all those markets. I think it's been an interesting week this week. I mean, it's always an interesting week, obviously, at the moment, with what continues to happen with Russia's invasion of Ukraine. Very volatile markets. It's been a really strong week for stock markets. We'll have a look at the S&P in a minute, but I thought I'd start off with that on the screen. You know, the rally we've seen off these mid-March lows. The S&P's up, almost 400 points, I suppose, from the absolute low. So it's probably an 8% move in a couple of weeks. So we'll come back to that. We'll come back to that in a second. But before we do, let's get the formalities out of the way. Let's do the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, next week, I think we've got to wait till the end of the week to see anything interesting on the economic front. So Thursday, it's the end of March next week. Where does the month go? So Thursday, UK GDP, so the UK economy, what's it look like, how's it done, all the usual. And then Friday is the big one, US Non-Farm Payrolls. So the US unemployment numbers will be out this time next week or an hour before this time next week. Normally pretty volatile and clearly, you know, lots of things are being overshadowed at the moment. Most stuff has been overshadowed by what's going on with Ukraine. But yeah, so non-farm payrolls next week. I won't be here next Friday. There'll be no live stream next Friday because I've got to be away. But it'll be interesting to see how the markets react to all of that. As usual, the housekeeping side of it. To find out more about Capital.com, go to our website. You can open an account, open a demo account, all the usual. Any questions, drop me an email, david.jones@capital.com. At Jones the Markets is my Twitter address. And jonesthemarkets.com is where you can find out a bit more about my trading approach. Follow Capital.com on YouTube, Twitter, and Facebook. I should say as well, actually, because I think most of you are probably subscribers to our YouTube page anyway, our YouTube channel. But we put a video up earlier this week, this one here. Will there be a financial crash? And we got Peter Schiff, who some of you might know, and Steve Keen. Again, I think a well-known Australian economist, to debate whether or not there'd be a financial crash. And I think it's really interesting that, I mean, obviously I don't watch our videos normally because I know what goes in them, but I did watch that back again because it's quite an interesting debate. Peter Schiff, I think, reckons that gold has got 10 times upside from here. So expects a crash in the US dollar and sees a massive upside for the likes of gold. I'm not quite sure if I'd see things the same way, but that's what makes the market, isn't it? Different opinions. So watch that video and take a look at it. Right, let's get into it. So I'm gonna start off with stock markets this week. I think next week is going to be an interesting week. This week's been an interesting week for stock markets, but I think next week is going to be interesting anyway. Again, because this is the S&P 500, so this is the broader US stock market. It did move out briefly to a fresh all-time high this year. Then it's been in decline. The S&P has gone from 4,800 beginning of January to about 4,100 in Feb. So it lost, what's that, 700 points. So that's about, at its worst, it was off about, is that 12, 13%? Something like that for the year to date. So we were in this downtrend, and then last week, I think I was talking about this last week, just started pushing through that downtrend line. And as the week has gone on, has broken above the old highs. So I do wonder, are we seeing a change in sentiment for stocks? Are we seeing the end of this correction that's been in place since early Jan? So that is why, for me, I think next week's an interesting week. Because what I would like to see now, a bit of weakness next week, we sell off, and where do the buyers come back in? Do we see people quite keen to buy the dip? So I think it's going to be a really interesting week next week for the S&P and other markets. You know, we have seen a big rally at the end of January on the S&P from 4220 up to 4600. So again, you know, nearly a 10% move in the US index, then only for it to run out of steam and get clobbered. And this was before the Russian invasion of Ukraine. You know, the market was rolling over before that. But I think it's really interesting. You know, we're at the downtrend, and we've broken through, you know, a previous major high from early in March, and we're trading back up to where it was the 10th of Feb. So for me, the market to watch next week is going to be stock indices, and in particular the S&P 500, to see if we've broken this trend. So I think that's interesting. Same for the Nasdaq, of course. If you look at the Nasdaq 100, the Nasdaq 100 is regularly, you know, one of the top traded markets amongst our clients. I think over the last month, over the last week, oil, gold, and Nasdaq were the three most popular markets. So I mean, the same story with the Nasdaq. You know, the Nasdaq ran out of steam earlier than the S&P 500. The Nasdaq peaked in November last year, and then couldn't take out the peak in December, and then has been in decline. So, you know, this year traded as high as 16,500, has been as low as 13,000. So what's that? It's almost a 20% fall from that high to that low. And again, we've seen that big comeback over the last week. So again, for me, I mean, I don't think these markets are just going to go racing away from here. So I haven't, you know, really bought in from a medium-term point of view to this recovery. But I definitely want to buy a dip if a dip holds. And that's why I think next week is interesting to see what happens. So for me, bit of pressure next week would be nice. And where do we see the buyers come back in? So stock markets for me are the hot markets at the moment. FTSE, we've got a trade on the FTSE. I've got absolutely no idea when we did that. We'll take a look at some trades in a minute. But FTSE, same story. I remember looking at this last week and saying, what a great level this 6,800 proved to be. May lows from last year, and July, and September, and March. And the FTSE rallied 600 points, 10%, again, off those levels. So again, I think FTSE is always a little bit different to the likes of the S&P and the Nasdaq, but interesting to see if we get a bit of weakness here, where do the buyers come back in? But a really strong finish to the week for stock markets. DAX. I mean, the DAX is a little bit strange, but the DAX, you know, had moved to its lowest since November 2020. You know, so this month we saw the DAX at a 14, 15 month low. So the DAX, I'd argue, is not as strong as the others, but again, we've seen this really strong bounce back from 12.5 to 4, so 2,000 points. So actually, it's an even bigger move in percentage terms than the S&P and the Nasdaq, I think. So that's interesting. So again, let's see what happens next week. Let's see where the weakness comes back in. And finally, the Nikkei. What is the Nikkei doing? Because the Nikkei is another one that just completely does its own thing. Oh, this is interesting. Oh, here we go. So if you didn't believe the strength in stock markets, this is the textbook level to go short the Nikkei. So the Nikkei, I think when we were looking at it last year, when other markets were going up, it was just a really strange market from about March last year, because even though everything else was going up, the Nikkei wasn't. And then we've sold off, and look at it now, bang on the trend line. Let's do that trade. let's fly in the face of this bullish move in stock markets. So let me think. If it's going to run out of steam here, we need to think about, well, where are we going to place the stop? I'm going to go somewhere above 29,000. Let's go 29,250. So I'm going to go short the Nikkei. Where's my stop go? 29,250 for a stop. We normally risk losing 100 quid on these trades. So how big do I need to trade? Hang on, let me just do the maths. Oh, it's a Friday. I can't do the maths in my head. There we go. So I'm going to sell 16 contracts of the Nikkei. And I'm going to take the view the downtrend is going to resume next week. But if it surges up to there, I'm going to get out. There's an argument for having the stop above 29,500, but let's do the trade. There we go. Sell. Short the Nikkei at 28. That's a really interesting one, that it's come back to that downtrend line. Let's see what happens. But I do think, I mean, it's been a great run for stocks over the last couple of weeks or so. And I do think, I can't see them racing away again next week. Famous last words. Let's see what happens. But really interesting market to watch next week. Okay, so we did those. What should we do next? Oil. I did a trade on oil actually just before we started today, because I think it is quite interesting down here. But let's start off with the dailies, and then I'll talk a bit more about that. So obviously massively volatile because of Ukraine, the Russian invasion of Ukraine. The oil chart was in a trend anyway. You know, if we go back, there we go. There's the lows in April 2020. The market was in a trend. If we pick up on this, I don't know, this newer trend, perhaps if we flip it over to an hourly chart. But I think it's perhaps a hard market to trade now. I do wonder if we have seen the highs for oil for a while. I don't know. But let's say our trend looks something like this. I'd say that's still in the trend line, even though it's wobbled below the trend line. I do wonder, you know, are we going to see these 126 highs challenged anytime soon? I would say no. So I think it's going to be much tighter trading for oil for me. I'd still be a buyer on dips. You know, if we got a big dip over the next couple of weeks down to $100, I think that looks interesting. If the market did try and rally back up above 120, I think it looks like a short. But I wonder, you know, given all that, and it's going to be the same for gold, and I'll look at gold in a second, given all of that, just that massive move we saw end of February, where it went from 90 to 126, has a lot of the steam gone out of this market. I did a video on oil this week. I thought it was really interesting, the lack of liquidity in the oil market at the moment. This wasn't something I was aware of, but I did some reading on Monday, and there's this thing called open interest. If you're familiar with futures, you'll know what open interest is. But basically, let's say I buy an oil futures contract on the futures exchange, and I'm the only trader, then the open interest is 1. There's 1 open position. If I buy 10 contracts, then the open interest is 10. So open interest at the moment for oil is at a 7-year low. So portfolio managers running positions on oil have cut back, I think because of the volatility. Shorter term traders trading oil have reduced their size. So there is actually less liquidity in the oil market than we've seen for 7 years, which can make for some odd moves in oil. So I thought that was interesting. But anyway, so I think chop, that's what I think for oil. Chop, chop, chop from here. I'd be looking to trade it at the extremes on the daily chart. But for me, I'd still be leaning to be a buyer rather than a seller. But for me, I think we'll just see some swinging in oil. The reason I bought it at 2 o'clock today, oil, basically because, where did today start? That's the start of today here. Yesterday, it did move to a new high for this little rally, and it sold off. I bought it today, wherever it was. I'm slightly in profit at the moment, I think, and put a stop under there. So I just wonder, will we get another push up to 116 next week before it runs out of steam again? I don't know, but from a short-term trade, I thought it was interesting for me anyway. But medium term, I just think we might just see a lot of chop for oil. Let's look at natural gas. I think we do have a trade running on natural gas, and they're doing really well. They could be the biggest winners at the moment. Hang on a second. So the natural gas trades are up £873 at the moment. 2 trades, 18th of December, 19th of Jan. Been running a while. So I think they're the biggest winners at the moment. Maybe I need to move the stops on those. Let's come back to that in a second. But let's look at natural gas. And those trades were done obviously before any of the Russian invasion started in December and January. And you can see, if you've watched any of these videos before, because the trend is up. So I bought in December, which would have been in here, and I bought again in January, which would have been in there, and the price has really taken off. If I didn't have any trades on, what would I do now? I really don't know, to be honest. Natural gas can be a very volatile market at the best of times. So for me, I'm in the trades and I'm just going to trail the stops up. I think the stops at the moment are at 5 for natural gas. So I think perhaps there's a bit more upside left from here. But if I didn't have a trade on, I'd probably rather wait to be a buyer of the dip. This was a real problem area, 6 to 6.5 for gas last autumn. And famous last words, I can't see it really soaring through there. So I'll just be a little bit cautious about it up here. Happy to buy a dip. Great trend. This is on the hourlies. If we look at the trend over the last couple of weeks, a great trend on natural gas. So if we got it, from a short-term point of view, if it got that not back to 520, then perhaps it looks interesting again. But from a medium-term point of view, I think a difficult one. When it's it's trading now where it was in November. So we're at fresh highs for the year so far for natural gas. Let's see what happens. So a bit non-committal really for me. Let's talk about gold and silver. Now, let's do silver first, then we'll do gold. I've got an order on silver that hasn't been filled, but so no trades open on silver. I said last year, when we look at silver last year, I'm going to cancel that order. We looked at silver last year. It was one of the most boring markets of last year. Absolutely dull as ditch water last year. There we go. From the highs that we saw in August. Hang on, I'm not deleting the order. That's why it's still there. Yeah, the highs we saw in August 2020, just sideways, And even though we have had some excitement this year in silver, we had a good run off the February lows with the price going from 22 to 27. That's a big move. It's a $5 move. It's a 20% plus move in silver. It hasn't really changed this bigger picture for silver. So, for me, what would you do now? I suppose that there is an argument for being either a buyer or a seller now, I think, from a short-term point of view. I think from a more longer-term point of view, it's actually still a boring market. It is still stuck in this range from about $21.50 to $29 to $30. So it's, at the moment, trading at 25, it's pretty much halfway through the range. So it's really not a market that would appeal to me at the moment. But if we looked at it from an hourly point of view, again, we had this great trend and the trends are out of steam. And here we are, so what would, I don't even know, what would the trade be on silver? I suppose an aggressive trade would to be a buyer, but I would want my stop loss probably the other side at least of $24.60. So I think it's just, so again for me, perhaps we just see more sideways trading for silver. So it is not an interesting market for me at the moment. But let's take a look at gold. I wrote something this morning. So one of the things, part of my job, we push out commentary to some of the news agencies, and we do every Friday. We write something for Reuters on precious metals. So I was having a look at gold today for Reuters, and they were saying, what do you think? Gold is holding pretty steady around its best levels for 10 days. What do you think it's going to go next? And I would say, I think it's really interesting, gold, because first of all, we had, gold is the classic safe haven destination. So we have Russia invading Ukraine. I think the hostilities continue to escalate. At the moment, it doesn't feel as if we're any near a peace agreement, for Russia and Ukraine. But gold didn't manage to take out, with all of this going on, did not manage to take out the August 2020 high. So that for me would be a concern if I was a long-term gold holder and expecting gold to go up loads and loads and loads. So I think, again, what would it take at the moment for gold to get above 2070? Just how drastic do things have to get? And I can't see it at the moment. So for me, that's one thing. Plus the fact that maybe stock markets are starting to turn around their weakness. Let's say we have a much more sustainable recovery for stock markets from here that we've seen so far this year, and people start embracing risk again. They're going to desert safe haven assets like gold. So for me, even though the trend for gold is still up from August last year, so I'd still be a buyer on a bigger dip than where we are now, I do wonder if the next movement, significant movement for gold is down from here. So let's see what happens. You know, it's I just can't see what the catalyst is going to be to drive it higher. You know, let's see what happens. But for me, if it drops back towards 1860, 1880, it looks like a buy. So you know, a bit of weakness could still be an opportunity. But if I was a betting man, where's it going to go next week? I would be leaning towards it going down. So let's see what happens. So that's gold. Let's take a look at Bitcoin. I think I did mention last week, I think to the surprise of some, I'd done a trade on Bitcoin. And again, for me, Bitcoin is just like any other market. You know, I bought Bitcoin at 39,600. I checked before I came on today, and I'm not buying it because I think it's going to 500,000. You know, I bought it because I think maybe the trend, the correction down is over. It's clearly, you know, made a base over the last month or so above 32 to 36,000. So I thought it was an interesting trade to do. You know, so far it's working. I mean, clearly it needs to get a bit of a move on Bitcoin. It needs to break through 46,000. You know, and I think if it can break through 46,000 and get a move on, then perhaps we bring in all the FOMO buyers again, all the crazy Bitcoin traders come back in and buy because they think it's going to the moon again. So I think that'll be interesting. If it can break 46,000 next week, then my next target would be a run back up to 52, the sort of December highs. First week of December highs at 52, but maybe it'll run out of steam again. You know, 46 has been an issue, hasn't it, for Bitcoin over the last month or so. So let's see what happens. But it does feel like the worst is behind it. That doesn't mean it's going back to 70,000 anytime soon. But it's clearly done okay, I think, over the last couple of weeks or so. And I'm guessing we'll look at Ethereum. I'm guessing it's going to be the same Ethereum. Yeah, it's the same old stuff, Ethereum. So again, for me in Ethereum, it continues to look like it's made a base over the last couple of months. And there's a bit of a hurdle from 3,300 to 3,400. And if it can break through there, I think once again, all the FOMO nutcases might be piling in and might push it a bit higher. Let's see what happens. So we did that. Other currencies, pound against the dollar. I did a trade. I've still got the trade running on pound against the dollar this week. It's not done much. It's a short-term trade based off the hourlies. Let's come to that in a minute. But from a daily point of view, the big trend is still down, pound against the dollar, from June last year. So for me, the better setup here would be for a rally and then a run out of steam again around 135, and I think that would be a good entry. So it's for me, looking at the daily chart, there's probably not that much to do. I did a trade off the hourly chart this week because since the 14th of March, it feels like it's trying to go higher, and it got knocked back down, and I bought it here. So I bought about 131.80 is where I bought. So I'm slightly in profit. I did that yesterday. It must have been, yesterday morning I did that trade. It's been up a bit, it's been down a bit, and it's where it is now. So for me, on that trade, I'm looking to see, can it run back to 133 and see what happens. So that's a shorter term trade, but off the dailies. Yeah, I just seen someone say catalyst for gold, maybe nuclear war. I think that's a fair point. It's always, who'd have thought we'd be talking about that, 3 months ago? But I do think what has to happen for gold to break out to all-time highs, and I think it is a drastic move of that scale. I mean, clearly, we all hope that doesn't happen, but I think it does need, something crazy to happen for gold to go higher, which is why I think it won't. Let's see. So that's pound against the dollar. If we take a look at euro US dollar, so I'm short. I've been short since February, I think, from 114 on this account. So that's up £570. So the trade was about here-ish, I think, or maybe there. I can't remember. It's still. I mean, if we go back to last year, we saw highs in. Actually, it's more than a year ago now. So the price of the euro has been slipping for more than a year now against the dollar. Really accelerated from May of last year, and here we are now. It is trying to build a recovery over the last couple of months. Personally, I wouldn't really trust the recovery yet. I'm happy to stay short in that trade for now. I can't remember where the stop is. Let's have a look at where the stop is. Stop's at 111 on the euro. So if it runs up to 111, I'd come out of the trade. Let's see what happens. But I just think for me, okay, it's had a good couple of weeks, the euro against the dollar, but still overall, let's not forget it has been sliding for 14 months now. So it's a bit of nothing for me at the moment for euro against the dollar. And the final one, the old favourite, the dollar index. I always say this is just a great market to watch. So the dollar index, I think this has helped gold over the last week or so because it's been pretty flat. But overall, the trend for the dollar index from May of last year is still up. Great trend, some great opportunities to buy into that dollar index trend. Perhaps at the moment it's a bit overstretched. So, if we had some dollar weakness over the next few weeks, I still think that would be a buying opportunity. I think we're putting out a video on Thursday. Is the dollar going to crash on Thursday? And we talked to, again, a couple of experts in that video. So if you're subscribed, you'll see that next week on Thursday. Personally, I'd say no. Watch the video anyway. But I don't think we're going to see a dollar crash. I think if anything, we've seen since the pandemic, March 2020 was the most recent major US dollar index high. The market was in a downtrend until pretty much June of last year. So for me, we are 8 months into this recovery. I'd still be a buyer on dips for the US dollar. Clearly, with inflation, interest rate rises, uncertainty around the world, the dollar is seen as a safe haven. I do personally think the US dollar could have further to go up this year, but perhaps in the short term, it's a bit overstretched. So that's the normal markets that we look at. Let's have a quick look, because someone did say, I think, a couple of times, can we have a look at some of the trades that would open? And someone also said, how come all your trades are always in profit? Because I'll tell you why. They're not always in profit, obviously, but Amazon is a loser at the moment. And the Nikkei, the trade we just did, is losing a little bit at the moment, but the rest of them are in profit. It's because I use this account for all the videos we do in the live stream. So it's a real account. It's just not got my money in it. It's got Capital's money in it. So every trade I do, I put a stop loss on. So when they go wrong, they get stopped out. But because I don't pay attention to them, the winners will sort of stay in there flip-flopping around. So the losers get cut really quickly. But the winning trades, I normally do end up giving back too much profit. Actually, there's an oil trade in here from the 17th of March, for example. So I bought at 97 and the market's nearly 110 now. So again, I don't pay enough attention to these open positions. And I only start to notice them when they start making a lot of money, and then I move the stop. So there's no trickery going on here. It's just the losing trades get cut very quickly, and then I forget to pay attention to the winning trades. So that's that. So for me, just to recap, I think the most interesting markets to watch next week are stocks. And for me, it's all about if we get a pullback from here, where does the pullback stop? Okay, so does the pullback, so if we go back to this big rally in January, market goes up, market pulls back and crashes to new lows. This time around, do we get market goes up, market pulls back, and the buyers come in and we start building a recovery? So I think for me, that's the more interesting market to watch next week. Let's see. So again, I'm going to jump into the questions now, but just a reminder, Capital.com to find out more and get access to the trading platform I'm using today, david.jones@capital.com. If you have any questions, at Jones the Markets on Twitter, jonesthemarkets.com to find out more about me, and Capital.com on YouTube, Twitter, and Facebook. Right, let's have a look at the questions. Hold on a sec. What are your views on TTOO, take two? The trend is up, isn't it? I think we've looked at this one before, haven't we? Because I must have drawn that trend line on last time. I would be a buyer. You know, it's just whether, do you buy now? I think there's an argument for buying now, isn't there? It's not. I mean, it's pretty much trading where it was in September last year. The big trend is up. If I was a buyer now, the closest I'd have my stop probably the other side of 130. You know, you could argue, and you definitely could argue, the correction's in place. So if you're going to be a bit more patient, you might want to sit it out for a bit. But, you know, from a pure technical point of view, we'd expect the longer term trend, which in this example actually goes back, you know, nearly 6 years, this trend. We'd expect that to reassert itself and for the market to carry on up. So it's interesting. I wouldn't say there's necessarily any rush to be a buyer, but for me, that big trend is still up. CMG, what's CMG? Is that CMS Energy? CMG, or is it something completely different? No, it's not. I don't think we cover CMG. We'll have to skip that one. Oh yeah, don't forget, clocks go back on Sunday, don't they, in the UK and Europe and continental Europe. So we catch up with the States, don't we? Because the Americans put their clocks back a while ago. Well, not a while ago, a couple of weeks ago. So at the moment, US markets open at 1:30 UK time, which is a bit confusing, isn't it? But we're back to normal after this Sunday. So thanks for that reminder, Richard. Coffee, let's have a look at coffee. I do have a trade on coffee. I think I mention that every time we look at it. I don't think it's doing much at the moment. So I'm in a trade in coffee. A really good market last year, coffee. Not so brilliant this year. So I'm in the trade for coffee. It doesn't look that brilliant at the moment, to be honest. I mean, the big trend is up for coffee, isn't it? You know, if we go back to whenever that is, 2020, November 2020, the big trend is up. But we've had, you know, it broke out here in Feb, and we had no follow through, have we? And it's just been going down since then. So for me, if I didn't have a trade on, I'd want to be a buyer, but I just wouldn't be in a hurry to be a buyer. I think perhaps the risk is that it'll go a bit lower. I suppose, you know, one way of looking at it, so I don't think I would go short, but I think one way of looking at it, you know, 2 was a bit of a level. You know, so let's see what happens. Does it drift off next week and it holds ahead of 2? I don't know. But yeah, for me, so like I say, I'm in the trade. It's not done very much. So let's see. Bit of a wait and see. Oil. We looked at oil. ARC Innovations. We are thinking at the moment about doing a video on ETFs, exchange traded funds. I think it'd be a really interesting thing to do because, and the angle is, do they distort the market? And clearly, you know, one of the higher profile ETFs is ARC, led by Cathy Wood. Absolutely the darling of investors in 2020, and not so much since last year. You know, big investor in Tesla and other higher profile tech stocks. But you know, I mean, it's a horrific performance over the last 12 months or so. It's gone from 160 down to $64 at the moment. So for me, you know, I mean, this is one that I do watch. I have on my own watch list. I don't think I've ever traded ARC, but I'm quite interested to see, does it start to turn around? Clearly, if we see the Nasdaq start to turn around, stuff like ARC will do better. For me, even though it's come out of that downtrend, I would want to see it break at least $72. So for me, if I absolutely had to do a trade, I'd go short. Oh, should we do that? Should we do a short on ARC? Let's do a short on ARC because it's like a proxy for going short the Nasdaq. So for me, I think the risk at the moment, particularly if stocks turn over the next week, is we could see under pressure. So let's do a short on ARC. So where's the thing? 72, 78, 6, 75. We'll put a stop at 75. So where's the stock going? $75. How many are we going to? So we're going to risk 100 quid as usual. So if I trade 13, there we go, sell 13, ARC. So I'm betting the price is going down here basically, but if it goes to 75, The trade will be closed for a loss. There we go. We'll go short. Sold 13 ARK Innovation. So it's a really interesting story, the rise and fall of ARK. Let's see what happens. See what happens with that one. But still weak for me. How do the new sanctions on Russian gold affect that outlook, though? Good question. I don't know. I did see today something about sanctions on Russian gold, and I'm just trying to Google it now, but I didn't actually read the story, so I don't actually know what it was. Oh, here we go. What do sanctions mean for Russia's 140 billion? I would say that the fact we haven't seen much reaction by the gold market is that it doesn't actually mean too much. Oh, here we go. The FT. G7 to crack down on Russia's ability to sell its golds. G7 leaders crack down and freeze. Okay. Now, okay, so that was yesterday, wasn't it? Was that yesterday? Yesterday. So that was yesterday. And so you'd say, well, if Russia can't sell any gold, it's got to be bullish, even mildly bullish. But actually, the price of gold has gone down today. The gold, I think, was that what caused the run up yesterday in gold? I wonder. Then we did have a bit of a run yesterday in gold, didn't we? Yeah, here's the move in gold. Maybe that was the move, and yeah, it's just been a bit boring. So I don't think it's that important, the Russian sanctions, on the sanctions on Russia gold. But let's see what happens. Alibaba is the mother of all downtrends, Alibaba, and it still is. Perfect time to go short, Alibaba. Look at that. I mean, we look at this is a really popular one, isn't it? And the trend for Alibaba has been down since October, November 2020. Perfect time to go short again, back up to that downtrend line. So for me, if it needs to break 140 to shake off this downtrend, but that has been an absolute blistering downtrend for that one, and still pretty weak. Natural gas, we looked at natural gas. We're about 10-year bond, big spike. I saw that. We don't cover bonds, unfortunately, so I can't look at that. Yeah, but quite a bit of volatility in bonds and bunds the last couple of days. Centrica, the old what's it? Gas, electric, all that sort of stuff, isn't it? Well, that's having a bit of a move. No, it's not actually. To put it in perspective, it's okay. It's interesting, isn't it? I mean, that's been a horrible 7 years, really. They were what, £3 in Feb 2015, and they're 84 pence today. Interesting though, isn't it? Let's have a look. Let's have a look at the trend. Looks like that. Bang. I mean, if we look at I mean, that's I mean, I would think about buying that. The big trend has been down. I think the big trend is well behind us now. So, and it's really racing away, isn't it? It's done really well. You would have doubled your money since August last year in Centrica. So, the fact it's breaking out to new highs today, and actually over the last few days, is a good sign. I always struggle to buy stuff that's hitting new highs because I always think, well, where's my stop going to go? So I'd rather wait for a sell-off and buy the dip. The risk is, of course, if you're waiting for the dip when the market's really motoring away, you miss it. But for me, that looks really strong. It's a good one, that, isn't it, Centrica? So yeah. So for me, I'd rather buy a dip, but pretty strong, pretty strong stock, that one. Hold on a second. I just lost where I am in the questions. US 30. So US 30 is the Dow. So it's going to be the same. I'm guessing it's going to be pretty much the same as the S&P. Actually, it's not really. Hang on a second. I mean, the Dow is a different makeup, of course. It's 30 stocks, isn't it? Whereas the S&P obviously is 500. I mean, it's just, it's similar to I would argue the S&P and the Nasdaq look stronger, but it's the same sort of setup. Are we breaking out of this correction that the market's been in? If you didn't think it was, again, you could go short now. If I was going to go short now, because I thought the run-up had been overdone, I would go short and I'd put a stop above this high from the middle of February, 35.2, which is 400, 500 points away from where we are now. But if we're going to go back to those lows, there's like a couple of thousand points potential profit. So it's interesting. So again, for me, the test for all these stock markets is if we see a sell-off next week, where does the sell-off stop? Right, Tesla. Let's have a look at Tesla. They've had a run, haven't they, Tesla? There was an interesting story out this week in the UK, in the Times. There was a analysis done by the Society of Motor Manufacturers, and it found that just over a year ago, for every electric car in the UK, there were 16 public charging points. Today, no, actually, there was one public charging point for every 16 cars. Today, there's one public charging point for 32 cars. So I do think the next big success in the whole EV thing is infrastructure. One of the reasons that Tesla has done so well, clearly, is you have the infrastructure. You don't have the range anxiety. And I think somebody needs to just sink a load of money into building a proper public charging network. I've got an electric car, and I definitely noticed it. I had to do when did I do it? Early this week. I had to do a 220-mile trip this week. And the chargers are much busier than they were a year ago. You've got a queue now. I went to the rugby last Saturday, watched Wales lose to Italy. Tragic. But again, I had to queue for only about 5 minutes, but a year ago you didn't have to queue. So it's that the infrastructure is not keeping up with the cars. Anyway, back to Tesla. For me, I'd still be a buyer. The trend is up. The trend is up on Tesla, as we know, since 2020. All right, it's broken below the downtrend, the uptrend, sorry, but it's only sort of flashed below it. It's trading back at $1,000. I would be a buyer again. It's had a bit of a run. It's gone from 750 to 1,000 in a couple of weeks. I'd rather buy a dip from here. If I was a buyer, let's say it dips back to 850, be a buyer at 850 and put a stop under 700. So I think that's an interesting trade, but I wouldn't buy it now personally. And of course, the risk is the thing runs away again. But I just wonder if stock markets as a whole in the last couple of weeks have overshot a little bit to the upside, which is why I think next week might be interesting. Let's see what happens. Right, what's next? Wheat. Of course, wheat had a massive move because, as we know, as I'm sure we all know now, Ukraine and... we don't have wheat. Hold on a second. I'll bring it up somewhere else. Ukraine and Russia are the so-called breadbasket of Europe, responsible for, I think, is it about 38%? 30%, isn't it, of wheat? So if I drag this across, you can see the move. And wheat was trending higher anyway, like so many of these agricultural commodities, that we look at now and again, like soybeans and cotton and things like that. So wheat, was trending higher from August 2020. Wheat was, I don't know, $4. Is it dollars? I don't know. Who knows? Let's say it is $4 a bushel, and moved as high as $13 a bushel. I hope those numbers are right. It basically trebled anyway from where it was in August 2020 to where we are now. So again, we've had, a bit like oil and gold, we've had this knee-jerk panic movement, I don't know, from the market. So the trend is still up. Would I buy it here? I don't think I would. I think if I bought it here, I'd have a stop, perhaps the other side of 1,000 on wheat. Again, perhaps it needs to unwind some of these gains, but, an undoubtable uptrend in the price of wheat. Really interesting market. Let's go back to the questions. Qualcomm. Let's have a look at Qualcomm. How are we doing for time? Okay, Qualcomm. Qualcomm. So what do? Is it chips or something like that, isn't it? Digital wireless communications equipment. There you go. Okay. That's a really old trend line. We've not looked at this for a while, have we? So for me, let's have a look. Let's plonk the trend. So I would say... So for me, I think, yeah, definitely. I would definitely buy it. So we buy it. For me, the trend is up. So the trend has been up since March 2020. So we're 2 years into this trend now. Only earlier this year, the market moved out, or the stock moved out to fresh highs for this move. If I was a buyer now, I'm not going to buy it because we've already done 2 trades today. But if I was a buyer now, the absolute closest I have my stop, the other side of 140, that recent low. If I wanted to give it a bit more wiggle room, the other side of 120, major low in October. The only other thing to do, again, I think with everything else, if you were worried that perhaps stock markets had gone too far in the short term, wait to see if we see it under a bit of pressure next week. But yeah, a clear trend in that one since March. Can we have a look at the Hang Seng? Yes, we never look at that, do we? I'm guessing it's not going to look a million miles different, or maybe it will, to everything else. Hang Seng 50. Oh, it does look different actually. There we go, I suppose because of what goes on with China and Hong Kong, perhaps. I don't know. Interesting. So we saw in Feb 2018, the Hang Seng traded as high as 33,000 and a bit. And since February of last year, it's been down, isn't it? And again, I'm guessing it's because of political reasons and all of that. So for me, the trend in the Hang Seng is still down. At the moment, it needs to break 25,000 to take out that trend line, which is nearly 4,000 points higher than where we are now. So for me, I would personally, I don't think I've ever traded it, but if I was trading it, I'd be looking to sell into strength, I think, rather than be a buyer into weakness. So let's see. We did gold. Watch again if you want to do gold. We did gold. BHP. Okay, BHP Billiton, the commodities. What do you call them? Just a commodities company, don't you? Commodities broker? I don't know what you call them. BHP. Is it that one? BHP Billiton. Oh, it's a miner, of course they are. Australian Mining, Metals and Production. That looks like the wrong one to me. Why is that? BHP Group. Is that the London listing? That's the Aussie dollar. Is it still listed in London? Hold on a second. That chart looks a bit weird. Maybe it isn't. No, it's not. Did they take their London listing away? BHP. No, it is still listed. BHP. Bear with me. I'm going to drag this one over because I've got the London listing and that's the US. Okay, this one makes more sense. Hold on a second. There we go. So that's BHP Billiton. Yeah, BHP Group. Great run, clearly, again, because of the strength of the likes of gold and copper, I'm guessing, and all of that. So for me, the trend is up, and at the time of doing this, if we pick up on the trend since November, I'd be a buyer on dips again, I think, for BHP. Again, it's just a question, where does your stop go? We're looking at it in UK pounds, so it's trading at £28.30 at the moment. My closest I want my stop, the other side of 24, but probably the other side of 23, actually. So for me, the trend in BHP is clearly still up. And again, it's just a question, would you buy now or would you wait for the pullback? I'm going to have to speed things up a little bit just to whiz through some of this stuff. PayPal, let's have a look at PayPal. We haven't looked at PayPal for a while. So have a quick look at those. Because it was really interesting last year because they were going to buy, was it Pinterest or someone they were trying to buy, wasn't it? Anyway, whoever it was they were trying to buy. And it wasn't, I think it was just ended up being unfounded or something. Clearly never happened. I've got no idea why I just clicked on update. That's a stupid thing to do. Let's bring up PayPal. But look at that trend. That trend has really changed, hasn't it, since September of last year. I mean, where's the stock's gone from about $300 down briefly below 100. So for me, for me, that trend is still down. And I know it is always tempting to try and buy stuff when it's fallen a lot, but there have been a load of people who would see it at 180 as a bargain, having dropped from 300, and of course, just fell further. So for me, it is a sell into strength rather than a buy the dip stock. PayPal, really. Please do live streams in nature if possible instead at a boring desk. Sure, in 2 weeks' time, let's do that. We'll do a live stream of me walking through the forest. So we won't have markets to look at, but we can all look at some nice trees. I'll add that to the suggestions. We looked at Tesla, we looked at oil. What else have we got? Gold, so we looked at gold. Lockheed Martin, let's have a look at Lockheed Martin. Again, defense stock, isn't it? Defense stock. So again, you'd expect a bit of a bump, wouldn't you? Off that. Bit volatile, to be honest. I mean, what would you do? I mean, the thing has broken out. If I had to do anything, I'd probably be a buyer. Clearly, it's got to lift because of what is happening with Russia and Ukraine. Before that, if we take Russia and Ukraine out, it's all a bit, it's just a bit sideways, isn't it? That's the last, what's that? The last two years, 2 and a bit years. It's a bit sideways. So, and I think so. It's very much an event-driven stock. If I had to buy it now, I'd put a stop loss probably the other side of $400. I suppose it's not one I'd buy. I think, to be honest, because I think it's just a bit too volatile. And if we do see some resolution in Ukraine, you could see a collapse of the stock, perhaps, or not a collapse, but a drop back to where we were before. So it's interesting, but a difficult one, I think, for me to trade. What do you think about Russia being open to accept natural gas payment in other national currencies, gold or Bitcoin? Could that hurt the US dollar? I suppose in theory it could, couldn't it? If it could hurt the US dollar, but not much, I don't think. I think for the dollar, personally, I think that the bigger theme this year is inflation, interest rates, and a safe haven in terms of geopolitical instability. So I think if Russia is open to accepting different currencies, I don't think it's going to have that much of an impact on the US dollar. And Rolls-Royce. So Rolls-Royce, this is Rolls-Royce, the engine manufacturer, obviously not the car company. The car company is owned by BMW, but Rolls-Royce engines. We look at this a few times, don't we? And I always say when I look at it, if I look at a stock like this, I go and look at something else. Absolutely no interest in something like this. But I know people love it because it was £11 in 2018 and it's 95p today. So surely it's got to be a bargain. But let's not forget, a stock that's at 95p can still drop another 90%. So for me, I suppose if you really wanted to have a little bit of a punt, it's pulled back to where it was in January of last year and July of last year. 85p was something of a floor. So if you fancied having a little go on the roulette table of Rolls-Royce stock, it's quite interesting down here. But if it broke below 80, I'd be out personally. So, but for me, it's just, it's at the bottom of the range, isn't it? So if you thought, well, actually, are we going to have a run back up to the top of the range? Perhaps it's interesting. So yeah, but for me, that's a horrible chart, isn't it, over the last few years. So we are going to wrap things up there. Thanks for coming along. Someone asked for silver. We did look at silver. So if you watch the replay, you'll see that. So like I said, for me, the markets next week, it's got to be stock markets. We're seeing a bit of a reversal today. And that's the question for me is we're not. It's only the last hour. Let's not get too excited. Do we see, this run in the S&P, for example, and similar in the Nasdaq? Do we see this start to get unwound a bit next week? And if it starts to get unwound a bit next week, do we see the buyers step back in, or does it go all the way back to the mid-March lows and the Feb lows? So I think it's going to be a really interesting week next week. That means our Nikkei trade must be in profit. Look at that. £14 in profit on the short trade on the Nikkei. What was the other trade we did? I can't even remember. It was in ARK. And £3 in profit in ARK. Absolute genius trading on the live stream yet again. We'll see what happens next week. But I think next week, interesting market. Interesting to watch stocks to see if they unwind and we get a bit more volatile. Let's see what happens. Right, we'll wrap things up there. So as I say, next Friday, won't be around for the live stream next Friday. But we're putting lots of content out next week. So make sure you're subscribed. That dollar crash video is going up on Thursday, I think, next week. So see what that's like. I don't think I've seen it yet either. So it'll be interesting to see what's in that and what the arguments are for the dollar crashing this year. I don't think it's going to happen, but who knows. So to find out more, as usual, go to Capital.com. Any questions, drop me an email, david.jones@Capital.com. Follow me on Twitter, @JonesTheMarkets. We'll wrap things up there. Thanks for coming along. Enjoy your week.